Still searching for that next big AI stock? Well, now might be your moment. We've got two undervalued AI companies that are quietly positioning themselves for some serious growth. Miss these, and you could be watching from the sidelines while others cash in.
Our confidence, if anything, has increased because of what's happening with artificial intelligence. Finally, ChatGPT captured the imagination of the investor. We had been talking about artificial intelligence since the firm started in 2014.
If you're into staying ahead, hit that like and subscribe button. AI is changing everything, but let's be real. Not every AI company is going to make it. Today, we're talking about two that are looking like real contenders. Stick around, because these could be exactly what your portfolio needs. Let's start with our first company, SoundHound AI, ticker Sound, which is making waves in the AI-driven speech recognition sector. As of 2024, SoundHound has seen its stock price soar by 128%. But to truly assess if this is sustainable, we need to look at some key technical indicators. For instance, using the exponential moving average, EMA, can help determine if the stock's upward trend has more room to run. If the 50-day EMA crosses above the 200-day EMA, it confirms bullish momentum. This is important because it means the stock could have a lot of runway left. But if the opposite happens, a death cross, you might want to reconsider. SoundHound specializes in creating customizable AI voice solutions and has successfully established a foothold in sectors like customer service, automotive, and even quick service restaurants. Now, here's where the Relative Strength Index, RSI, comes in handy. SoundHound's stock price has surged, so it's crucial to check whether it's overbought. If the RSI crosses above 70, that signals the stock might be overheated and could face a pullback soon. But if it's still below 70, SoundHound may have more room to grow. Their client list is impressive, including major players like Planet Fitness, Honda, Hyundai, and Stellantis. These partnerships have allowed SoundHound to significantly increase its revenue forecasts for the next couple of years. In fact, the company raised its fiscal 2024 revenue guidance from approximately $71 million to over $80 million. And by the year 2025, SoundHound expects to generate more than $150 million in annual revenue. Another important tool to consider is Bollinger Bands. With SoundHound's volatility, these can help spot potential reversals. If the price consistently hovers near or breaks above the upper Bollinger Band, it might indicate the stock is overbought and a pullback could be around the corner. On the flip side, if the stock touches the lower band and the RSI is under 30, it could indicate a buying opportunity. SoundHound's acquisition of Amelia, a leader in conversational and generative AI, is another big deal. This partnership, along with their move into the voice commerce sector, is expanding their reach into sectors like retail and healthcare. But remember, despite these strong fundamentals, it's crucial to use indicators like the EMA and Bollinger Bands to assess whether now is the best time to invest. Despite the strong fundamentals, there are risks to consider. Like many AI-driven companies, SoundHound is not yet profitable. That's why checking technical indicators like the RSI and EMA regularly can help you stay ahead of potential market corrections or rallies. Given these growth drivers and the positive signals from the EMA and RSI, SoundHound AI seems well-positioned to capture a significant share of the global conversational AI market. This market is projected to expand from $13.2 billion in 2024 to nearly $50 billion by 2030. If you're looking for a stock that blends cutting-edge technology with substantial growth potential, SoundHound could definitely be worth considering. But before we proceed, here's a question. Do you think AI-driven voice technology will dominate customer service, or is there another tech that could take over? Comment your thoughts below. Now let's dive into our second company, Symbotic, ticker SIM, a specialist in warehouse automation technology. Symbotic has been volatile recently, so tracking its 50-day and 200-day EMA can help confirm whether it's in a recovery phase or still trending downward. If the price crosses above its 50-day EMA, that could signal the start of a rebound, especially if it's backed by an RSI reading that's still below 70. Symbotic's mission is to transform supply chains by automating warehouses, and despite a few setbacks, the company has a bright future ahead. In the third quarter of 2024, Symbotic delivered mixed results. The company's guidance for the fourth quarter has also been a bit of a letdown for investors, signaling a temporary slowdown in revenue growth. However, analysts are still bullish, and it's important to note that Symbotic is currently trading at 5.9 times its trailing 12-month sales, well below its historical price-to-sales ratio of 13.2. This could be an indicator that the stock is undervalued, making it an interesting opportunity if you're using a combination of Bollinger Bands and the RSI to confirm entry points. What's particularly exciting about Symbotic is the massive backlog of committed contracts. $22.8 billion as of the end of the third quarter. This backlog represents strong demand for Symbotic's automation solutions. Again, Bollinger Bands can be useful here. If the price is nearing the lower band and the RSI is near 30, this could be a signal that the stock is oversold and might be due for a reversal. On the other hand, if the RSI crosses above 70 and the price is nearing the upper Bollinger Band, that could be a sign to hold off or sell, as it might indicate an overbought condition. The EMA can also help confirm whether these trends are part of a longer-term upward or downward trend. Symbotic's warehouse-as-a-service venture with SoftBank, known as Greenbox, also presents significant upside potential. The company has a $7.5 billion purchase contract as part of this partnership, and any positive developments could drive the stock price higher. From an investment standpoint, keeping an eye on Symbotic's RSI and EMA trends can provide early signs of whether the stock is bouncing back from its temporary slowdown or still facing challenges. The company is well positioned for long-term growth, but like any investment, it's essential to monitor these indicators to make informed decisions. To summarize, using the exponential moving average, EMA, relative strength index, RSI, and Bollinger Bands can help you time your entries and exits on both SoundHound and Symbotic, giving you a clearer picture of when these stocks are overbought, oversold, or showing strong momentum. So let's take a quick look at some key numbers for SoundHound AI and Symbotic to get a better sense of where they stand. First up, SoundHound AI is currently trading at $4.62, with a solid market cap of $2 billion. What really stands out here is their 66.87% gross margin, a strong indicator of profitability. It shows that even though they're not yet fully profitable, they're generating solid returns from their products and services. Plus, check out their 52-week range. The stock has swung between $1.49 and $10.25, so there's been a lot of action. And with almost 12 million shares traded, there's clearly a lot of interest from investors. Now on to Symbotic. They're priced higher at $18.41, with a similar $2 billion market cap, but their gross margin is much lower at 14.34%. This suggests that while Symbotic is growing, they're not quite as profitable as SoundHound right now. Their stock price has also fluctuated significantly, from a low of $17.11 to a high of $59.82, showing some substantial volatility. They've got a smaller trading volume at 1.5 million shares, so they're seeing less movement in the market compared to SoundHound. In a nutshell, SoundHound is looking strong with its high profitability margins and strong investor activity, while Symbotic might be an interesting play if you're looking for a company with growth potential that's been flying under the radar lately. Keep an eye on these figures, as both stocks could offer unique opportunities depending on your strategy. Overall, both of these companies, SoundHound AI and Symbotic, are at the forefront of AI-driven innovation. Whether it's transforming customer service with conversational AI or revolutionizing supply chains with warehouse automation, these companies have the potential to deliver long-term rewards to investors. While SoundHound is more focused on voice and speech recognition, Symbotic is tackling the operational challenges of warehouse logistics. Each has its strength. SoundHound boasts a robust client list and growing revenue projections, while Symbotic's backlog of contracts and improving technology make it a strong player in the automation space. That said, it's essential to weigh the risks before investing. Neither company is currently profitable, and both face challenges that could impact their short-term performance. However, if you're looking for exposure to the rapidly growing AI sector, both of these stocks deserve a closer look. Thanks for watching Simple Investing Secrets, your go-to source for financial insights and stock recommendations. As we wrap up, here's something to ponder. If you could hold only one AI stock for the next 5 years, what would it be? Let us know in the comments. If you enjoyed today's video, please like and subscribe for more updates on how to grow your wealth. And remember, this video is for informational purposes only and is not financial advice. Always do your own research before making any investment decisions. See you next time.